I'll just give you guys high level, a little bit of background on us. Not really commercial, just some quick background, and then talk a little bit more about what we're seeing in the market, particularly in the industrial trades businesses.
Everybody on the call, all the members, will y'all put in the chat box so Craig can see what your industry is? I think that would be something helpful for him to be able to see and kind of gear his communication.
So you guys saw Ray. Ray had a big exit at the end of 2024, and Craig was the man behind that. How long had you been talking to Ray before you guys exited, Craig?
Probably 14, 15, maybe even 16 months.
Yeah, he's the one that told me about you, and he says, man, this guy's just like helping me so much and giving me all these insights, and go with him.
I gave him some tips to really kind of extract value and really position the business for optimal results. And that's what he did. That includes having middle management in place, having a number two. The business owners that are on here, the key thing is to be working on your business, not in your business. Can you guys see this?
Yes.
Cover page? Okay. All right. So like I said before, for those of you who just joined, I'll go through a little bit of our background and introduce myself. And then I'll go into some private market detail and data that we're seeing and why investors are focused, in trades-based businesses and all of these businesses that you guys are owner operators in, or maybe just owners in. It's a great time to be in this space. And we'll talk about why. Some of you folks that were at DM a couple of weeks ago or a month or so ago may see some of these slides and look familiar. But to take a step back and understand what is private equity by definition. Effectively, if you look on the right side, private equity and private equity firms raise money from what's called limited partners. These are public pension funds. These are high net worth individuals, family offices, endowments, sovereign wealth funds, insurance companies. Just think about them as a lot of capital aggregators or money aggregators. Now, there's a lot of data on this page. I won't go through it all, but what I really want to hit on is the amount of capital that's out there right now, which is a fancy term on Wall Street, dry powder, or this is just cash. There's nearly 1 trillion of it. It's actually 980 billion sitting in these, and this is just in the United States, sitting in these operating accounts that these private equity firms need to invest in a finite amount of time. Key transaction rationale for sale, right? So why should I bring on a partner? What should I do as I think about as an entrepreneur? Why trade? Why bring on a partner? Well, obviously the opportunity for a liquidity event and to de-risk yourself and to pool some of the wealth that you've created out of your business. You still have the opportunity to maintain upside ownership and be able to, not only have a liquidity event today, but also have a liquidity event that could be even more down the road.
One more question about the brand. Obviously, the brand is important. The company, so I bought a company roughly 2 years ago called Pring Roofing. One of the family members, maybe 20 years back, broke off and started another company called Pring Roofing and Sons. So if it does come to a point where we sell the company, what are your thoughts on that? Two separate companies that are named similar.
And it's in the same city.
Yeah, that's a good one. What they're doing internally is like everything's kind of rolling up to the core umbrella, right? And then in these different markets, they have these different operators. If you do that and become a solid and one of the core market share players in those different divisions, there's a lot of value there, 100%. If the name is highly important to generating the revenue, which a lot of times in the resi side it is, right? Because you slap your name on the HVAC or the water heater and they're going to call that, right? Because nobody wants to call 3 people to change their water heater, right? So there's brand equity and brand value there. And these firms want to hold on to that as much as possible.
$1 million in EBITDA annually, is that the number where private equity gets interested? Or do you see some niche services where it's less, or is it higher than that now?
Yeah, so, it used to be 1 million was the needle mover back in 2020 after COVID, 2021, certainly when there was all that federal government money.
What about in the pool business? Pool installations, have you seen them go to private equity? Are they interested in those?
What's interesting? It's a great question. 2 years ago, nobody wanted to touch pool with a 10-foot pole, pun intended. And then also think about other product and service lines too. Like you could easily pick up lawn maintenance or install sprinklers, right? With the landscaping component of it as well. And you could almost third party that out too. Subcontract that work out. You could also think about doing hardscapes as well, right? Like all those things that go into a backyard.
So we're looking at this rebar company. It's a commercial rebar installation and fabrication, but they also do supply. So other contractors come to the yard and buy materials.
Mm-hmm.
They do very little of that. Maybe 10% of their business is supply.
Mm-hmm.
How is the valuation going to be split from a PE perspective for those two lines of work.
Yeah, real quick. I know other people probably have some questions. I just wanted to ask you, Craig, how big of a role do like contracts and whatnot play into a valuation of a company? And I guess I'll preface that a little bit. So in our auto glass company, we're not your prototypical where we're only strictly servicing cars and trucks on the road. We're really going after a specific target avatar of like commercial clients. So, but we do not currently have any contracts in place with these people. So would that diminish a valuation down the road if we decided to sell, or when we do decide to sell, if we do not have any contracts in place with those people, even if there is historical financials to show the recurring revenue that is there?
Yeah, it's a great question. It really depends on the space.
How is it in the restoration space? Like, have you done any of them? How common are they? Like, what does it look like for them? Because I know for us, and obviously Chris knows this, as far as like business and referrals, like we're very different depending on like what we're doing. Like I know with Ray and the plumbers and stuff, their margins are kind of like similar, but for us, it's kind of all over the place. Like we make a lot on mold, but then other things, there's a smaller margin. So like, what are you seeing on that end, just so that we know?
Yeah, the challenge, and we have one right now, is pretty large. They're in Colorado, California, and Texas, and Florida. The challenge there from a remediation perspective, restoration perspective, it's project based.
Thank you so much for coming on. Let's take next steps and get you going on more stuff and helping more people.
Yeah. Thanks for having me, guys. I appreciate it. I hope it was helpful. Hopefully I can come back on. You guys can noodle on this and maybe next quarter jump back on, see how you guys are progressing. And these types of conversations I do enjoy doing. We wake up every day and love helping entrepreneurs like yourself be able to take it to the next level. That's what it's all about.